If you have read or watched The Big Short, you probably remember Michael Burry and Steve Eisman, the guys who made a fortune when the US housing bubble burst between 2007 and 2008. They made a good story, but in reality, a bigger winner was a man named Kyle Bass. You may not have heard of him, but it is estimated that his fund made a profit of $4 billion. Earlier, the media reported that Mr. Bass is starting a new fund solely for betting the peg between the Hong Kong dollar and the US dollar will break in 18 months. The fund is leveraged 200 times, which Bass says will give his investors a 64-fold return if the Hong Kong dollar drops 40%. And of course, if he turns out to be wrong, the fund could lose all of its value. In this video, we'll talk about Kyle Bass. Why is he betting against the Hong Kong dollar? And how likely is he going to succeed this time? Who is Kyle Bass? Kyle Bass worked at a few well-known financial institutions before founding Hayman Capital in 2006. In 2007, he made trades of credit default swaps, the insurance policies that paid off when the subprime loans lost value. The $4 billion profit made him one of the biggest winners of the financial crisis. He was also believed to have contributed to the collapse of the famous investment bank Bear Stearns, which was Mr. Bass's former employer. After the financial crisis, Mr. Bass had some success betting against the Greek sovereign debt and the Japanese yen. But since late 2013, he had made the wrong predictions about General Motors stocks and the oil price, which is not surprising, as any investment comes with its risks. Mr. Bass has been a critic of the Chinese Communist Party. In 2016, he predicted that the Chinese Yuan would fall, which led to Hayman Capital's worst performance since inception in 2017, when the main fund lost 19% of its value. He had to exit the position in 2019. Perhaps he underestimated the Chinese Communist Party's strength in currency manipulation. Despite the setbacks, Mr. Bass didn't stop looking for new targets. In May 2019, about 2 months after Hong Kong citizens started protesting against the Chinese Extradition Laws, Bass revealed that he had a short position in the Hong Kong dollar. But the Hong Kong dollar has been maintaining its peg to the US dollar since then, which means Mr. Bass's bet hasn't paid off. And now he is starting a new fund for largely the same bet. Why is he doing that? What's behind Kyle Bass's prediction? For 36 years, the Hong Kong dollar has been pegged to the US dollar, which means the amount of Hong Kong dollars one US dollar can buy has been artificially kept between 7.75 and 7.85. This is harder than it sounds. Like many other things, the currency exchange rate movement is largely a function of supply and demand. It is like trying to balance a scale if the scale can't stop swinging. When the Hong Kong dollar is weak and one US dollar can buy close to 7.85 Hong Kong dollars, the Hong Kong Monetary Authority will buy Hong Kong dollars with the US dollars in its reserve to prop up its currency. In the opposite case, the authority will buy US dollars with Hong Kong dollars. So to prevent the Hong Kong dollar from collapsing against the US dollar, the Hong Kong Monetary Authority needs to have a large amount of US dollars in its reserve. And this is usually not an issue when Hong Kong is politically and economically stable and receiving a net inflow of US dollars. But since last year, Hong Kong's political stability has been diminishing. This is about the nicest way we can put it. In May, the Chinese Communist Party created the National Security Laws for Hong Kong, signaling the end of one country, two systems, and likely Hong Kong's prosperity. Businesses and Hong Kong's elite are considering leaving the city. Residents have been transferring their money overseas or exchanging their local currency to US dollars. The political unrest, along with the pandemic, has led to a recession in Hong Kong, with the 2019 fourth quarter and 2020 first quarter GDP decreasing by 3% and 8.9% respectively. If you're not an expert in economics, that means bad. Really bad. On top of that, Mr. Bass pointed out that Hong Kong's bank loan to GDP ratio is 8.5 times, more levered than both the US and mainland China. This means Hong Kong's financial system could be more likely to collapse in a recession, which would be devastating to its currency.
I think, again, the die is cast. You can't lever an economy that much. You can't have real estate values at astronomical prices and then all of a sudden turn the economy off. You know what happens next. Everyone knows what happens next. It doesn't take a genius to know that they are going to have one of the ugliest banking crises that's ever happened to any country anywhere in the world.
Hong Kong's troubles are no secrets, but that doesn't guarantee its local currency will break the peg with the US dollar. On June 2nd, the Hong Kong Monetary Authority claimed to have over $440 billion in its reserve, more than twice of Hong Kong's monetary base, and that its financial sector has strong resilience. But Mr. Bass's calculation from last year suggested the minimum US dollar reserve to maintain the peg is $495 billion, and he estimated that Hong Kong's actual reserve to be only 13% of the reported number. Only time will tell if his estimates were accurate. Will Beijing support the Hong Kong dollar? Based on data compiled by Bloomberg, the current consensus suggests only a 6% chance that one US dollar will buy more than 7.9 Hong Kong dollars in 12 months. But keep in mind, the broad consensus before the 2008 financial crisis was that the US housing bubble would not burst, and the big winners were those who bet against the consensus. Like any bet, to win big, you need to put your money on the underdog. Kyle Bass is not the first to bet against the Hong Kong dollar. George Soros tried in 1998, but failed when Beijing vowed to back the Hong Kong dollar with its foreign currency reserve. Beijing could try to do it again. However, this time might be different. Professor Ing-Ming Tak from Hong Kong Baptist University believes that Kyle Bass is likely betting that the US will take stronger actions against Beijing, which will cause China's economy to collapse. When that happens, we could see Chinese companies default on the loans obtained from Hong Kong's banks, leading to the collapse of Hong Kong's financial system and therefore the Hong Kong dollar. Perhaps Mr. Bass's chance of success all comes down to the US government's determination and ability to destroy the Chinese Communist Party, which it sees as a dangerous strategic rival. And whether he should put in the bet in the first place depends on how well Mr. Bass knows about the CCP. As Sun Tzu stated, quote, "If you know the enemy and know yourself, you need not fear the result of 100 battles." What's your opinion on this bet? Leave your comments below. Thank you for watching Unseen Fortunes. If you enjoyed our content, please click like, subscribe, and share. We'll see you next time.